So you have released this Diary of a Pandemic, which details your kind of emotional roller coaster, which I think a lot of people and certainly a lot of CEOs have had,
Yeah.
what it means for your company, your business, your employees, all of these people that you are essentially responsible for. You talk about, the uncharted territory for everyone,
Yeah.
demand plummeting, you admit to underreacting, you talk about your own
Yeah.
vulnerabilities, choices that you may have made that maybe were the wrong
Yeah.
decisions, customers demanding apologies, the stock dropping.
Yeah.
What is the sort of main lesson that you've learned over the last 8 weeks that might guide how you make decisions over the next 8 weeks?
To empower your team, I think the reason I wrote the post is because I wanted to celebrate the team that came together. So many decisions that we made that turned out to be good ones were decisions that I opposed initially. I wasn't interested in virtualizing home tours because I thought people had to see a house to be able to buy it. I wasn't interested in raising capital because I thought we could find a way through. And our CFO and our chief product officer and different executives at different moments stood up to me and said, "You're making a mistake." And if we hadn't had that culture of dissent, the company would have been really screwed up.
Now, you talk about the moment where, suddenly demand in Seattle and the home buyers essentially disappear. And you say
Yeah.
you have, there's this point where you have 100 million unsold houses on the books and 1,000 idle employees. Obviously, things have changed because now we're sort of
Yeah.
used to this. But how different is now from that moment when you realize that?
Well, what's changed is that we've had 4 straight weeks of increasing demand. So it's been a very volatile time, almost all through March. It was one express elevator to hell going down. But now in April, week after week, demand has been coming back. There's a massive asymmetry in the market where buyers are out in force, but nobody wants to sell their home. So it's still hard to say what's going to happen to the real estate market. But I think it was hard for us because we decided to let 1,000 people go on furlough at the beginning of April. And then almost as soon as we did, demand really started coming in force. A good week right after that, and then another good week and another good week and another good week. So at this point, we've brought back about 250 people out of the 1,000, and we plan to do more over the next few weeks.
And you're having a lot of success with these virtual tours, which, you
Yeah,
mentioned earlier was something that you opposed. Talk to us about what's working, what's not working, what you've
yeah,
learned, and what might
yeah.
last beyond the pandemic.
Well, I think what's happening is that people are previewing almost every home online. So you're still going to see the property you end up living in for the next 20 years in person before you buy it. But we can write the contracts so that we agree on terms, we agree on a price, and then the owner clears out and lets the buyer into the home. So even in a pandemic, it's easy to see the property without putting anyone at risk. But virtualizing that experience, creating three-dimensional scans, doing work around video chat tours was something that involved a rogue team. So Jonathan Eldridge, Christian Taubman put their neck on the line and said, "This is going to work. I know we tried it 3 years ago and it didn't work, and some people left the company over that. But sometimes the idea that you tried too early, that you become viscerally opposed to as a result, is the best idea. And in this case, it saved our bacon. It's what kept this company going over the past 8 weeks."
Now, in my own neighborhood, there's a house down the street that had 23 disclosure packets out. So those are 23
Yeah,
people who
yeah,
wanted to buy just one home.
yeah,
What sort of signals are you seeing about demand that might give us some
yeah,
indication of what the housing market looks like over the next six
yeah.
months?
So I've been through this before. In 2008, when there was a recession, inventory was piling up month after month and prices were only going in one direction, which was down. But now in April, we're seeing that inventory is actually down 25%. There aren't enough homes to buy. Home buying demand is at 96% of its pre-pandemic levels, and that's even after you adjust for seasonality. So the issue is that buyers see this as a sale, an opportunity to get assets at a discount, and sellers aren't ready to list those assets. And so we're going to have more bidding wars this summer unless some homes come onto the market soon.
So, what does that mean for pricing then?
Well, prices right now are stable, if not up. It feels crazy to say that they can continue to go up, but we are about to run out of homes to buy. We are at near rock bottom levels of inventory. There were structural reasons that there wasn't enough inventory in the market even before this pandemic started. We can't build houses. Zoning laws are screwed up, all sorts of stuff. But right now, if you add to that nobody wants to sell a home unless they absolutely have to, you just see the mother of all inventory crunches in our future.
Now, working from home is creating these sort of massive corporate and potentially even cultural shifts that may live
Uh-huh.
on long after this. And there's talk about
Yeah.
reshaping the workplace, reshaping
Yeah.
cities, this flight to the suburbs, or maybe it doesn't matter where you live if school's
Yeah.
not in session and everything is remote. How does that impact the housing market?
Well, it's a seismic shift to small towns. So if you compare the traffic for listings that are in a city over 1 million to traffic to listings population under 50,000 towns, the towns are twice as much traffic right now. It has been a trend that was happening before the pandemic because there was such an affordability crisis in San Francisco and Seattle and New York and LA. But the pandemic has really put an exclamation point on it. If you can work from home and have a job at Google, why would you pay to live in Mountain View? And so lots of people are looking to other places where there's a better quality of life, where homes are more affordable, and their employers are going to let them do it, because we've learned as employers that people work hard from home and that we're glad just to have them on board.
Now, initially, there was all of this discussion about who'd be the first to return to work. Now it seems there's a race to be the last
The
to
last,
return to work.
yeah.
You mentioned Google. Google's already told employees they can work from home through the end of the year. Same with Facebook. You know, are we going to see more of that? Is that something that you're considering as a CEO? Because, I'm just
Yeah.
curious just how deep this trend will persist.
Well, we're in no rush. Why would we ask people to come back if they're uncomfortable being in a room with one another? So I personally am ready. I need to be in an office again. My kids are driving me crazy. I'm probably driving them crazy. But I think most people just feel really wary of being in a closed space with their colleagues. And so it might be all year, it might be part of next year. We just don't feel the need to make any decisions before we have to. And maybe the reason I feel that way is because there's so much decision fatigue, where every day we've been making one decision after another. And this is a decision that we don't have to make right now. So why would we?
What about commercial real estate? We've seen mass layoffs at places like Airbnb,
Yeah.
Uber, Lyft. I mean, you've had them at your own company, and laying off people means you don't need as much space. Are we going to see a huge contraction in the commercial real estate market?
Long term, we've all signed these 5 or 10 year leases, at least the large tenants have. And when you call and say, look, no one's even in the space, give me a break, you find out from your landlord that they're struggling too. And so WeWork was obviously having trouble before this. I think the fact that they bet so much that commercial real estate would be in high demand for 10, 20, 30 years was the undisclosed risk in that business, or it was disclosed, but not many people recognized it. So commercial real estate is going to be in a pickle for a long time to come.
And in general, do you have a view on rates? Because, there was this initial push
Yeah,
to refinance, then this
yeah.
belief that maybe rates wouldn't go lower because of concern about over overbuying.
Well, I think rates are going to stay very low. There was a period in March and April where there was so much credit risk in the system, where the forbearance laws that the US government had passed just made every lender unwilling to loan money. The federal government was shoveling trillions of dollars into mortgage-backed securities, but the lenders were saying, if you can get a year of forbearance without any penalty whatsoever and without any documentation, I'm still not going to loan the money. And now the government has said, even if you originate a loan where someone immediately asks for forbearance, we've got your back. And that just means it's on like Donkey Kong to offer really low rates. So every lender is racing to the bottom right now because the government is backstopping almost every risk that we've had over the past 60 days. And at first, that wasn't the case, that we were letting borrowers off the hook, but not the lender. And so the lending market was freezing up in March and April, and you saw rate spikes sometimes as a result.
Now, here's my last question. You write about underreacting and how that was obviously not the right choice in that moment. Are you at all concerned about overreacting now and about other leaders overreacting, or is that not possible given the severity of this crisis?
No, I think about it all the time. Um, the pendulum never stops swinging in the middle. So you're sitting there at the beginning of a crisis telling yourself it's not a crisis, it's not a crisis, it's not a crisis. And then you have an oh shoot moment where you decide, oh my gosh, we are closing the office, home buying is on a breather, if not a permanent vacation, and we are in trouble. And at that moment, you have this fight or flight response, but you have to remember that there are 4 to 6 million homes bought in America every year. Even in the depths of the great financial crisis, there were 4 million homes. It's a fundamental need. And that's true of travel and almost every other business. And that's why the street has bid up stocks that are temporarily down, because they want to hold those stocks a year or 2 years from now and buy them at a discount today. So I think that you just have to be kind of two minds. I know this is a long answer, but the short term is terrible for a lot of companies, but the long term is pretty good, especially if you've invested in technology. The economy is fundamentally sound, or it was before the pandemic. And as we virtualize more and more of the world, it's going to favor companies like Redfin and all the other people who are on your show.